FUBO TV, FUBO, stock update for FUBO TV. Darren sent in a fax request. Thanks very much, Darren. Let's have a quick look at the chart and talk about the prospects for FUBO TV. There's been a long bearish thesis on FUBO. Strong downward move, long-term trend, never really got into anything positive in terms of trend. This is the weekly. The bearish thesis with FUBO is that their expenses outstrip the revenue. They've only got so much cash to burn and they're going to eventually go bankrupt. That's the idea. The bullish thesis is that FUBO can reduce their cost of sales, develop a positive profit margin, grow the business and capture market share in the sports streaming industry. But as you can see, weekly time frame, the bears seem to have the argument at the minute. The bears seem to be winning that argument. Now, this is the most recent low where you can see there's bullish divergence between price action and momentum. So that led to a reaction. Price moved to the top side, back above the 200 into the bullish control zone. I don't like to argue with price action when it's in the bullish control zone, nor do I like to argue with it when it's above the 200 period moving average. And I really don't like to argue it when it's putting in new highs, as it is in this leg of the trend. If we look left, you can see that it's reached a critical area, this previous high, previous trade we talked about, and it's come in, touched that same level of resistance and found a tiny turnaround has transpired. But we're still above the 200 period moving average and the 50 simple, along with all the exponentials that are important. The 236 retracement from the low here that we just recently put in, we'd reached that over, we've exceeded that. Again, very positive move there. This guy is from the high to the low. Looking left, this is a breakdown, pardon me. So this breakdown started a very strong linear trend. As you can see, we marked that out. Price action then, 236 is at 2.28. It's recovered that one, and 2.67, that's moving back up from, where is this guy? The ultimate high. So back above both of these two important 236s. So you could say that this is a local low. Comparing it to the previous low doesn't really work, because that leaves you, in terms of looking for divergence, it is lower, and looking for this tiny inflection point again, it is lower. So you don't get long-term bullish divergence or enough of it that you would say, we've got a really strong case here for a real big reversal. And then looking left, you can see divergence hasn't really been the thing that led to even the local oscillations previously. So trend definitely is your friend until the end of the trend, which, where would that come in then? If the downtrend is still intact, despite the fact break this linear downtrend, and you went through this diagonal, the important level is the horizontals. You're back above the 236s, so a local low is formed, but that doesn't necessarily mean the trend is broken. You need to get back above previous highs and put in higher highs and higher lows. And the first one of those would come in when you break back above the local high we've just put in, the local turnaround, pardon me, when you touch the previous resistance at 3.28. So back above 328, that's when you can start getting positive about potential higher highs, higher lows, trend change. On that move, you'd like to exceed 386, or at least to try and test those levels, and that would give you the impression that the recovery might be a regimen. With it, we could draw we could understand how it might evolve with this Fibonacci retracement. So obviously this guy will be important too from the previous high, but it doesn't cover the ultimate high. We can also check where that might come in with this Fibonacci. Update him since the trade in January. Where is your low? There you are, buddy. Take that across, you can see then the ultimate 236 that we're looking at is confluent with the golden pocket retracement on the most recent recovery fib we were talking about, so in at around 952. So that's a huge move it could potentially go through if it breaks this downward sloping resistance, but I'm not targeting that right now. Looking at the 236 and the 200 period moving average on the daily, and the fact that the 50 simple is approaching that area, so you will likely get tests of that cross. Let's see what's happened so far. It's pretty difficult to get a clear picture of such tiny candles. So there's a gap here Price action's left a gap on the daily time frame. 50 simple would touch the 200 period moving average if price action persisted above them both, which might lead to a test of that golden cross. Price action testing that from above gives it the chance to bounce at either of those two moving averages, 50 or the 200, and that might represent the best trade. The problem, there's a worry if this does really start turning around, is if it breaks that 200, then of course you've got the potential golden cross, and that might catch you at the 50 simple. But if it does break the 50 simple, then you've got this downward sloping diagonal, which is likely in for a retest. And if that comes in lower than your previous low, you've got this gap, which could again then be tested. And you could be talking about retracements down to test this previous low again. If you exceed that gap and come in for a double bottom in at around $1 or even potentially less. So huge targets to the top side at 9 if the golden cross pulls through and price action continues on upwards. If it fails here, having met previous resistance, and doesn't get any support at the previous high, which is the 200 period moving average, comes in at around $2.10, then you'd be looking at a test of the 50 simple in at around 195. That's currently, and it would be higher than that at the time. If that doesn't hold, you'd be looking at a test of the prior low in this formation in at around 149, and a test of the diagonal resistance previously, now support hopefully. And if that doesn't hold, you'd be looking at testing the top side of a gap at 134, closing that at 118. And if you were doing that, price would have come back so far, having failed to break above important levels, that you would be looking at 119. So all of these levels, critical areas for managing with stops if you're going long. And if you're going short, then that's a potential entry with the stop at your previous high, 330, call it. Anything just beyond there. So this is what you'd be looking at then. On the 4-hour time frame, you'd be checking the momentum. You see you're in the bullish control zone still. Don't like arguing with that. That could potentially break to the top side. You could have seen that happen an infinite amount of times. So we'll see how it evolves. But overall, this price action is breaking to the top side, higher highs, higher lows, tests of 330 possible. It has reached that area once. So now it's a question is not necessarily like jumping in this straight away, but where would be the best entry? And a 236 comes in at 245, 382 comes in at 207. Having tested this previous peak though, you could see a retracement down in at around 50%, which would take you down to 180. And so if you're looking for a breakout move, then that's very close to those levels. It might be that your long position, if it was a long position, would be looking at that 200 period moving average, saying you wouldn't necessarily want to go beyond there. You certainly don't want your stop to be taking you backward into the previous formation and going beyond a golden pocket. And perhaps, you know, you could be looking to target this at around 180. Perhaps you're looking at it safer would be around 167 if you're really eager, and but you want to use the moving averages and the strategy we talked about outside the video. Then maybe your 50 simple on the 4-hour will be your first test in around 217, 220. That'd be probably a bullish entry. The higher your entry, the more risk on a stop that goes down so very, very far. The targets, again, your previous high, if that was your only target, then it'd be very risky entering with a stop so far from that entry. You know, what is that, 2 to 1 or so, 50-50 trade, one spot 5-8, yeah. So the risk reward ratio on this is terrible. If you were looking for that entry and that stop, then you'd really believe this was a breakout. And even then, it's just very large. It's not necessarily a very good trade setup. I'd want a tighter stop than that. But this identifies the top entry and the furthest stop. So, you know, it's not an exact setup, but it does encompass all the targets. And if you were looking for that, then maybe that would be your $9 move that would justify such a huge risk area. But your targets are actually the previous high. You break that, you've only got a tiny little bit to go at 380 before you've got another inflection point. If that breaks, I would see this thing in at around $5. Get above there, you're looking at this spike, $8.11 to the 236 up at around $10, and that's a huge range even on those targets, but it's so very far away from here that we'd have to check in with it again before then. That's the 4-hour. Down in the 1 hour, as small as it is meaningful, you can see you don't have bullish you don't have bearish divergence between these peaks, but you do have a lower high come in price action, holding this tightly, holding this short-term exponential moving average. RSI back up, still holding the center line without price action having really moved down that much. Quite a dramatic move down, and obviously momentum then catching it's not obvious, but the momentum's catching potentially this trend line at the center line, which would be indicative of this thing boosting on up again. And if you are really looking to take this thing immediately open on Monday, and you go whatever it is post-market trading or at open, then you would want your stop in at around 250 if that entry is around 285. And you'd be targeting the 330, and then the next targets we talked about only just incrementally higher and then a big chunk up. So could be looking at this as continuation. The move hasn't finished, and this is just an oscillation on momentum that will lead to further rises to the top side on the hourly, but I would be cautious of that on the 4 hour, where looking left you can see you haven't really demonstrated the same strength and momentum as you did at the impulse part of the move. So it may well be that you need to test these areas again and come back to 220, and that's why that's a safer area. It might give you a better risk reward on a trade and overall in your portfolio work out better. But if you notice something happening, then jump on. Sure, fair enough. Right, so that's what I think. Put a comprehensive look at the different ways that you might trade FUBO TV and a stock update. Obviously the streaming sports industry is very competitive, and while FUBO have done a good job recently of reducing their costs, in particular their subscriber expenses, which is their greatest cost of sales and part of the yardstick used to beat them with, the truth is that these contracts that they own are very much in demand, and as other streaming platforms recognize that there is consistent subscribers renewals within these particular sports and events, then they'll look to acquire those licenses, which will push up the operation and production costs for FUBO TV. So the best case for FUBO TV shareholders may well be that they manage to improve their bottom line so much that it becomes an attractive proposition to buy the company on a multiple of its subscriber revenues, rather than competitors try to compete with them on acquiring license rights to show their the subscription services. So that's what you're looking at for FUBO. Potential buyout would be great. They need to do a little bit better in terms of reducing costs and increasing revenue. Do we see that happening immediately? Chart says that it's had an impulse move. It could come back and test important levels of resistance and hope for them to be now support. If it does break above 330, then the bulls will be in charge for the time being. And I'll be happy to look at this again. Thanks very much for the fact request, Darren. If anybody else would like me to take a look at anything, just let me know using the links underneath the video or there on the screen. You can see them underneath my head, my big puppet head. Right, streamlabs.com/tradespotting/tip or streamelements.com/tradespotting/tip. And I'll get back to you. Got other videos to look into making now. We're going to talk about IMUX, CANVA, AI, BDTX, CVS, and EVGO. So if those things interest you, be sure to check out the channel. Thank you very much. Hit the like button. Definitely hit the like button.